Good afternoon, everyone, and welcome to Stock Market Today for Monday, June 23rd. It's Alissa Coram here. And the major indexes staging an upside reversal today at a key support level amid ongoing tensions in the Middle East. We will discuss more. And joining me now to do just that is my colleague, Justin Nielsen. Justin, what do you have for us today?
Yeah, I mean, there was a lot to choose from today. So it was a tough call, but we went with a few stocks that were looking interesting. We will take a look at. I was trying to even remember which ones I ended up with. CyberArk. I mean, there was so much strength in the security software area. You had a lot to choose from there. Toast in the financial space, and even retail. Dollar General looking very interesting on the comeback trail.
Yeah, well, I mean, with a lot going on underneath the surface, if there's a lot of actionable trade ideas, that's a good sign for the market, especially with the major indexes at key support. So let's talk about what we mean by that. Here's a look at the NASDAQ reversing higher and closing up almost 1% on the day, Justin, coming down right to that 21-day line. Meanwhile, the S&P 500 also up just about 1%. And look at where we closed. Look at that power, not only above Friday's high, but also above 6,000 for the S&P. So that's quite impressive as well. The Dow, blue chips here, up 0.9% on the day, outside day, upside reversal, and the Russell 2000 also up about 1% on the day. So for the bulls, it seems like this is exactly what we wanted to see today, Justin.
Yeah, you really couldn't have asked for a better looking day. You got your shakeout. If you go to the 5-minute chart, I think it'll be
Yeah.
pretty evident. We
Yeah.
started weak, started coming on strong, and had one final shakeout, and then it was kind of off to the races. So that shakeout was really kind of an opportunity to look. It's tough sometimes because, of course, if you were looking at things and you were saying, "Oh, okay, this was looking bad in the morning," and I'm gonna just, as long as it stays above the lows of the day. Well, you had a bunch of things kind of take out their lows all at the same time. But if you just sometimes wait 5 minutes, that was one of those cases where 5 minutes later, and it was already, undercutting and then back above, and a really strong bar there. And again, it was really a strong close. So you got that support at the 21-day moving average line for both the NASDAQ and the S&P 500. Those are the ones that we're really watching the closest. They were looking the strongest. And then, as you mentioned, look, that 6,000 level, I think it's a little bit too early to declare victory, because it's one thing to get above it. Now, our next thing is, can we stay above it? Because we've gotten above it a number of times on the 6,000 level, but we just haven't quite been able to stay above it. But a lot of, we talked a lot about positive expectation breakers on Friday, and I think this was just another great example of one. You would have expected more weakness, and with the news that we got, look,
Yes.
that's enough to make a lot of people very uncomfortable. But even with the futures market yesterday on Sunday, yes, we opened down as kind of that news was digested, but you saw the buyers immediately come in. That's kind of what we saw today in the market session. So very, very resilient market. It's really just bad news that could absolutely sink the markets. They're coming up. They're coming up strong.
Yeah, and it has it. And Justin, I think we found a new nickname for you and Webby, the Positive Expectation Brothers. So
Okay.
there we go. We'll have to share that with him. I
Yeah.
think the other thing notable, Justin, about this upside reversal right at the 21-day is the fact that we've been in a power trend, right? And
Yeah.
so for us as active traders, and something that you and Mike Webster, our senior market strategist, along with Charles Harris of O'Neill, came up with these rules for how to handle these powerful trending markets. And this is exactly what you want to see in that type of environment.
Yeah, absolutely. And, one of the things is, look, we've had a higher distribution count. We've been seeing that over the last few weeks, kind of that rolling window that we look at, the, 4 to 5 week window. And we have had an elevated distribution count, both on the S&P 500 and the NASDAQ, had unequivocal distribution on Friday. Yes, you could say, oh, well, it was triple witching that made the volume higher, but dollar volume was higher. Even on a vacation, following a vacation day. But yeah, we've had that distribution, and so again, sometimes when you have that power trend in place, and you are acting well, you want things to kind of keep you in your positions and not shake you out too much. And that's what the power trend is designed to
Mhm.
do. It's not necessarily saying, hey, this is a 100% guarantee you're going to make money no matter what, but it's kind of like, hey, give your things a little bit more room, especially if you can kind of keep above those levels, keep above those support levels, keep above your 21-day moving average line. It's kind of just make sure you're leaning bullish a little bit more
Yeah.
and not getting too scared out by normal pullbacks. And I mean, look, as far as pullbacks go, this was very nice in terms of sideways action. A lot of these downside reversals where you just didn't get the follow-up move to the downside. So you really couldn't ask for a better kind of correction or pullback.
Mhm. Mhm.
And the end result is that this gave us a lot of setups as we added on handles or 3 weeks tight or shelves. It just gave us more setups to use. And with the number of reversals that we have today, we can just be using the lows of today, and we've got an easy way to kind of manage our risk and make sure we don't get in
Yeah.
trouble. And at the 21-day moving average line, it's even better.
Exactly. So a key day on a number of fronts, especially I think, Justin, when you take into consideration that in a lot of ways for investors out there, since that late April follow through day, it's been a lockout rally. We've seen
Mhm.
stocks more than double off of the lows. So the fact that we've seen this gentle pullback and a powerful trend, and now, it's almost like a reload moment. Okay, if we're going to keep going, this is the time that you have that risk management level set to be adding new positions or adding to existing positions. We'll see how the week unfolds, but so far so good.
And look, even with this lockout rally kind of thing that we had, there's some of the, the risk on trades that are still really not giving you another chance to buy them. I mean,
Right.
even looking at the IPO market, this has been the strongest IPO market that we've seen in a while. Whether it's Circle, you knew exactly where I was going to go. We talked about what was that AIRO? We talked
Yes,
about that
we
this
talked about
morning.
that this morning.
Really strong move after the pullback. CoreWeave, which is I do have a position in CoreWeave. That's on the newer side. Just came out of there like gangbusters and has been very strong. There's just
Yeah.
Hinge. That was our stock of
Oh
the day
yeah.
today. So
I knew
that's
there was
another one
another
that
one.
right, exactly. There's just been like again a lot of these really strong stocks that have been
Mhm.
not really giving you a chance to get into them.
Yeah, very powerful environment as of now. Let's take a look at a couple of ETFs, Justin, with all of the geopolitical news and the US involvement and what we're seeing with the conflict between Israel and Iran. Defense stocks definitely in focus. Talk to us about what you're seeing with the ITA ETF.
Yeah, so this is one we talked about on Friday. A nice setup there, and this is exactly what you want to see. You want to see that follow up. This was one of those rare areas where it really didn't give up much ground at all, whereas a lot of things were undercutting lows. This was just moving higher, and so it's a good example of that follow up activity that you want to see. But look, there were a lot of ETFs out there. XLY was probably the biggest gainer today. Tesla certainly helping that out, quite a bit. But look, another one where here you got that support right at the 200-day moving average line for your XLY, and again,
Mhm.
nice sideways movement. You can really just manage the trade pretty easily here. You've got a level at that 200-day moving average line where you're going to know, okay, yeah, this isn't working out the way I thought it would. And there was a lot of participation. I mean, energy was the only sector that was down today. And I'm sure part of that had to do with the closing
Yes.
of the
Mhm.
strait by Iran. So that was putting pressure there. But everything else was up. Whether it was industrials, real estate. I mean, you've got a number of REITs that are looking interesting. DLR, for your data center REIT. A lot of these handles that are forming. So a lot of
Mhm.
participation, as you noted at the outset. Even the small caps were joining in the fun.
Yes. We've got two more ETFs to look at before the individual stocks, Justin, it sounds like.
Yeah, sure. What was it? I know that the last one was the cybersecurity one.
Okay. The other
Um,
one I wasn't familiar with, so that's why I was tossing it to you.
Oh, KBWB. Yes.
Okay.
I wanted to bring this one up because Tim in the comments gave us this idea, and as I was kicking the tires on this, I really liked it. KBE is usually our go-to for our bank ETF, but the problem with this one is it's very spread out. So your top 5 companies probably have a 6% weighting. But after the show, I was kind of, again, kicking the tires on that KBWB. So again, I love our audience and how much they give us things to search for on our own. KBWB, it's got, the biggest weights are in Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Wells Fargo. The top 5 there probably have a 40% weighting, as opposed to KBE, where the top 5 have a 6% weighting. So it's just a lot more heavier into those names that we've been looking at a lot closer. And so big outside day here really broke out. So this was one that, I really appreciate Tim bringing this up on our radar.
Thanks, Tim. Yeah, another one for the radar, KBWB. Let's now quickly take a look at the cybersecurity space. This ETF is CIBR, outside day, upside reversal at highs after going really tight, Justin, up 1.9% today. So definitely outperforming the major indexes.
Yeah, and again, this was just of all the areas, I think this one jumped out at me the most in terms of just how many stocks
Yeah.
that were looking interesting. So I picked CyberArk, for today, but man, there were 5 others I could have easily gone with. So again, CIBR, that one went on to Swing Trader. You have other options if you prefer Bug or Hack. These have some great tickers that they've gotten, and they all look pretty much the same. Support right there at the 21-day moving average line, kind of right at the level of their breakout too in all of these cases. So that was another thing that looked pretty good on those. And to that end, CyberArk had that same kind of look where you look at the breakout from that cup with handle, and then you kind of just had this nice little pullback. You got support right at the top of that handle, and really strong move up 3.7%, outside day closing near the top of the range, and breaking that downtrend in this little pullback. Support at the 21-day moving average line. This was just, again, one of those looks that we saw all over the place in the market today.
Very compelling there. And to your point, Justin, about looking at a thematic ETF, if you're seeing a lot of stocks in the same industry group all moving together, if you're seeing the ETF showing a compelling technical setup, that is another way to play the group, without having that single stock risk. So that is always an
Absolutely.
option.
Mm-hmm.
Okay, let's take a look at Toast. Outside day, upside reversal, kind of a theme, Justin.
Yeah, a little
Uh,
bit.
yeah, 2.4%.
And what you'll notice about a lot of these stocks is that they really didn't give up much ground as the market was going sideways here. This is a flat base. It only is a 10% depth. And look, the thing that's been a little bit tough about this market has been there have been a lot of these. I don't know how many times I've tried Toast here in the last couple of weeks where it looks like it's ready to go. Yep, I bought it right there, and then it closed kind of middling, and then downside reversal back, down to the 21-day moving average line, and I'm cutting my loss. But sometimes you have to try these a number of times. So if you
Right.
have been trying these and not been successful, but if the stock chart still looks okay, I think some of these are worth another shot, because sometimes it's not the first time, it's not the second time, sometimes it's the third time that's a charm. And Toast is got a nice setup here. You've got the fundamentals here.
Right.
Now, I know this is coming from negatives. That's why we have our little hashtags to let you know
For
it's
the
coming
earnings
from.
growth, yeah.
Yes. But you've got solid sales growth. The revenue has been very solid on this. This is, double digit and has been for a while. So that's a positive. Now that this is getting profitable, that's even greater. And we've also talked about those retail restaurants that have been looking very strong.
Yes.
Shake Shack is one that we mentioned on Friday. That had a nice follow-up move today. I do have a position in that one. So you got to figure that, okay, with some of these restaurants doing well, Toast is servicing them with its product, and so that's just kind of an easy way to get confirmation that, hey, yeah, something special might be happening here.
Yes, good stuff. I also like the added perspective that the weekly chart provides because we're right at the 10-week line
Yeah.
after that powerful breakout on earnings a number of weeks ago, finding support at the 10-week line, bouncing off of that level, in addition to the flat base that you pointed out, Justin.
Couldn't agree with you more. And the way that we have stocks come down to their support lines, their moving average lines, does make a difference. In this case, this wasn't so much that toast came down to it as it let the 10-week
Yes.
line kind of catch up to it. It just basically went sideways, and you see the angle of that 10-week line is very strong, and it basically was like, okay, I'm just going to go sideways and let that 10-week line catch up, and that's exactly what happened. So a nice added bonus there.
Mhm.
So I'm glad you pointed that out.
We like to see it. All right. Last but not least, let's check out Dollar General. A nice move on earnings in early June. The percent gain that day, Justin, was almost 16%. That's a pretty big move for Dollar General.
Yeah.
And then it went sideways and tight for a couple of weeks, now up 3%. Tell us more.
Yeah, I mean, Dollar General, I usually don't expect to have, such a big move. And not just on the earnings, but I mean, if you look at its move from the 50-day moving average line at like 86.25, I mean, those were some pretty big moves for Dollar General as well. And when you look at the weekly chart, you just see how it was unwilling to give up any of those gains. It just traded so tightly. We saw this in a lot of stocks as well. Zscaler is one that I'll just point out as another one in the cybersecurity spot
Right.
that we were talking about on IBD Live that had that same 3 weeks tight and then a move out of there. So Dollar General, yeah, looking very strong. And as with most of these stocks that we covered, there were so many stocks to choose from. If you wanted to get another retail discount and variety stock here, Ollie's market, has been one that we've been looking at, and that had a very strong move. Again, it just didn't give up much ground as the market was going sideways here, and now here it is, posting new highs. They're just again, this day had a lot to choose from.
hmm And I think the fact that we're seeing that coupled with what the indexes are doing, despite headlines
Mhm.
that you think would spark fear, it's telling. Of course, tomorrow is another day, as
Right.
always. In the words of Scarlett O'Hara, but right now there's some pretty compelling evidence for the bulls.
Yeah, and look, this is also why we say the trend lines over headlines. Last week, Ralph Acampora on the podcast was, that's how we started it out, and that's a line I know that you've taken to heart and have
Mhm.
mentioned a lot of times. But it is true because
Yep.
headlines. I can't tell you how many times if you had given me the headline the day before, it would have actually messed me up more. It would have made me so sure that I knew what was going to happen. And the fact is, I've been humbled way too many times that I don't know, and that's why I rely on charts.
Yeah. Headlines can be head fakes, you know?
Absolutely,
So, all right. Well, thank you so much as always, Justin. We appreciate it.
absolutely.
And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live. Investors.com/IBD Live for all the details. We will see you there starting 10 minutes before the opening bell. And we'll see you right back here tomorrow after the close. Justin and I, you get us 2 days in a row. We'll see you then.